Good afternoon, everybody. Welcome to this episode of Moving Markets. My name is Jeffrey Dunyan. I'm joined today by my co-host, Kevin Hurley. It is Monday, April the 24th. U.S. stock markets just recently closed. And we're here to talk about maybe just a little bit about what went on today. It was kind of a lackluster day, but talk a little bit more, I think, about what to expect in the upcoming week. Kevin, any thoughts on specifically on what went on today in the market?
Well, it's funny. We call it our program Moving Markets, right? And the markets really didn't move for me 4 out of the 5 days last week, not moving today. Earnings are not moving the market right now because companies aren't having spectacular earnings. Not that they're super bad, but they're not super good. I think our markets are just caught in the realization that inflation is killing the earnings. And in all honesty, just between you, me, and the fence post, the government's doing nothing to help it out. If not, they're just making it worse. So, with some of that said, I know you're going to ask me, well, Kevin, how are they making it worse? I don't know if you've noticed that new points you pay or what you're going to get charged if you take out a loan. So, it'll be interesting to see what happens.
Yeah, all right. And in case I won't know until we're done with this podcast and when we got it in the editing studio and we're kind of clipping it and getting rid of some of the little technical issues. I missed part of what you said, Kevin, because for some reason my computer just completely booted me out for a few seconds. I was able to get right back in really quickly, and so I caught part of what you said. I'm not going to ask you to repeat it all because the recording may have picked it all up. We'll see. But I agree with you. Pretty lackluster day. I think that's going to change as the week goes on. It is a big week of earnings this week. Big week of earnings. What are you most looking forward to as it relates to the earnings coming up this week?
So, I'm looking forward to technology. And we've got Google, we have Microsoft, we have Meta. I'm looking to see how technology has been holding out in the higher inflation environment. So those are going to be my focus. I know we've got a ton of earnings, big portion of the S&P 500, but I'm focusing on technology. That's where I'm going to see if those cash-rich companies are not nearly as affected as much by inflation as we are led to believe. How about you?
Same thing. I'm also keeping an eye on, you got McDonald's reporting tomorrow. You got GE. You've got General Motors. You've got some other really big Halliburton. I agree with you that the focus for a lot of people, I think, is going to be on technology, myself included. What do you got? Three of the five famous FANG stocks that were driving the market for nearly a decade. It used to be Facebook, now it's Meta, so they can't call it the FANG stocks anymore. But for us nostalgic people that still don't like the name Meta, you got Facebook reporting, you've got
The main
Amazon
stocks.
reporting. Apple is not until next week, but then Netflix was last week, and then you've got Microsoft in the mix there. I mean, it's a Google. It's a big week for these technology companies. Earlier today, I don't know if you were watching Charles Payne on his show on Fox Business News, made a reference to the old, I think it was the 1927 New York Yankees team that had Murderer Row. You had Lou Gehrig, you had Babe Ruth, and a couple of other power hitters there that no pitcher liked to face because these were the big power monster hitters. That's kind of like, Amazon, Google, Microsoft, Meta all reporting this week. That is a big deal. And in the midst of this, you've got more layoffs announced by Disney, even though they don't report this week. I wonder at least if any of these conference calls are going to include any additional information about possible layoffs. Amazon has had a couple of layoffs, something I didn't think I would see for ever. And then you can't forget those non-tech companies like GM, GE, Boeing. I used to trade Boeing a lot. You and I both used to trade Boeing a lot. I haven't been in Boeing for a few years. I exited Boeing when they, a couple of their planes crashed and they came under FAA investigation and things got a little ugly. Um, but yeah, huge week of earnings. And then coupled with that, um, you got the GDP numbers coming out on Thursday, and there's been a ton of talk about recession. Do we start the contracting GDP this quarter? Or are we still maybe a quarter away?
Well, they're only expecting what, 2% growth? And from earnings, I don't think we're getting it. It would not surprise me if GDP is in the tenths of a digit growth right now.
So
Watch it
maybe
come in at
maybe
zero
not.
point 0.7 or 0.8.
Okay. So maybe not contraction yet, but you're thinking possibly GDP numbers come in, below zero, or excuse me, below one.
Well, right, worse, much worse than the 2% that they're expecting.
And that is the consensus is two. That's hard for me to believe that the consensus estimate. I hadn't looked at that real close earlier today, but
2.0.
hard for me to believe that consensus estimate is 2% growth. Um, I man, that's
Yeah,
and that
where would
range
that
is big.
2% come from right now?
I don't know. I don't know. Companies are laying off. Things are shrinking. People are spending less money. Uh, I don't know where it comes from. I really don't. It'll be interesting Thursday morning to see those numbers and see how the market absorbs those numbers. That to me, that's almost as interesting as what the numbers themselves are. Some people believed if we let's say this quarter is the beginning of those two consecutive quarters that would equal recession. Because honestly, if let's say it's minus 0.01, you're going to have a lot of people saying we're now in recession, even though it hasn't been two quarters in a row. They're going to say, well, this is the beginning of it, and we'll look back after another quarter and say that was the start of the recession. Was the second quarter of, or excuse me, the first quarter of 2023. I think we're a quarter away. I think the number will be positive, but yeah, I don't know where the growth is coming from. I really don't.
Me neither. In fact, that's why I'm interested in technology. We did have a couple banks, JP Morgan and Bank of America, that seemed to do okay, but boy, Morgan Stanley, Goldman Sachs, a lot of the banks were awful last quarter. Seems like gas prices are, I'm going to say, mellowing out, not really coming down, but no big growth there. Homes being built, it seems to be that they're still in a material shortage of some kind. I just don't. I'm trying to think of a sector that has growth in it. Healthcare, maybe everyone getting heart attacks, not believing what the Democrats are doing in our government. Maybe healthcare's up.
Travel's been a little bit on the rise. It's hard to know. I mean, it's still rebounding from COVID, but the travel and hospitality industry has been a little bit on the rise. Be interesting to see if that can maintain because again, people's wallets are shrinking. All that stimulus money people got for a few years, they're starting to run out. Credit card debt is loading up. There's a couple of reports that have come out recently that show that credit card debt is on the rise. People don't have the cash reserves and the government money that's been handed out to them to lean back on. So yeah, gonna be pretty fantastic. And then last but not least, as far as this week goes, uh, this has a tendency sometimes to slip off of people's radar a little bit, but this personal income PCE is a big inflation indicator, almost as big as CPI and PPI data when they come out. Um, it's something that the Fed looks at now. Whatever the Fed is going to do next week when they decide to raise rates again or not raise rates again, this report that comes out on Friday is not. I don't believe it's going to influence what the Fed does. I think what they're going to do has already been decided, and Tuesday and Wednesday is just the formality of the commentary and the announcement. But this is a big deal. If this number comes in hot, which if you remember last month, the number was down from the previous month and it was down a little bit year over year, But that year over year number that came in, the last report, that was still a hot number. That PCE year over year number of 5%, that's still a hot inflation number. That's still a full, uh, 3% away, 66% away. If you want to say what's the difference between 5 and 2, it's still 66% away from the 2% that the Fed says they want. The consensus for it is 4.2. I don't know how they're coming up with this consensus. And I got to tell you, if that number's not closer to 5, I'm going to start floating my conspiracy theories again next week.
Interesting, interesting, interesting. You know what's interesting is the fact that there's so much uncertainty that no one can come to a consensus of what exactly is happening. There have been so many things that are out there that are blaming for the lack of growth in regards to inflation and management of the country, companies. There is so much information out there that could be right. It's hard to make your best educated guess.
I think with everything that's going on throughout this week, all the different earnings, you're going to have some of them coming good, some of them coming bad. You've got those GDP numbers. Hard to say whether the market's going to interpret them as good or bad. You've got the PCE numbers on Friday. I think the S&P is going to consolidate through the week. I think you're going to stay in this range that I just outlined on the screen here. I think it's going to start narrowing a little bit, tightening up, and I think it's going to put us in a position for a Fed announcement next week that is really going to pop this market one direction or the other. I think you're going to get that. If you're a technical trader, you're going to get a tightening of the Bollinger Bands around the S&P. Who knows what the Dow and the Nasdaq will do? They're both a little more volatile. But the broader market, the majority of Fortune 500 companies that are in the S&P, they're going to consolidate, and then when that Fed announcement comes next week, and depending on the commentary that Powell adds to the decision, the market's either going to think everything is good and it's all sunshine and lollipops and roses again, and you're going to see this market explode upwards at least for a little while, or it's going to be interpreted as bad and the sky is falling and Chicken Little will rain and everyone's going to sell out. I don't see after that announcement next week a flattening market. I see a big pop to the upside or a big sell-off.
So let's finish really quickly. What are your thoughts? If you were going to put money down, where is our market going next week?
Well, I wouldn't, and I've said this for several weeks, and I know it gets a little bit old, but I'm not willing to go any direction except non-directional. So if I'm putting, and I don't think, we might tighten for a week. If I were doing a real short-term trade on the index, I might do something like an iron condor, do some type of a butterfly trade that's looking for a number that sets right there in the middle of these lines. Really, really short term. I wouldn't do that long term. Once that Fed announcement comes, I'm going to be non-directional. I want to be positioned where I can make money to the upside, be protected, or make money to the downside, or both. If I were doing option only trades, I'm sticking with straddles and strangles, long iron condors. If I'm buying any stocks right now, there's no way I go through these next couple of weeks without having long puts in place with the stock that I own, and probably a full collar trade with covered calls as well. I just can't imagine right now trying to outguess what this market is going to do.
I got to tell you, I just believe we're going to have an interest rate hike. I don't believe they can stop. I am also in protective put and collar trades right now just for protection. But I just don't feel we just don't have inflation tamed yet. And I don't see how, well, like always, I think the Fed is going to overshoot and be at least a couple days late.
I would tend to agree with you. If I were forced to make a decision up or down, and I couldn't choose middle, I couldn't choose, I don't care, I just want it to be a big move. If I was forced to choose up or down, I'm going to lean maybe 60-40 to the downside right now, and say that the Fed is likely to overshoot. I think they're going to do a 25 basis point hike next week. I think with that is going to come some commentary that is not going to convince the market that they're pausing after this. And I think that's going to be seen as a real doom and gloom scenario for all the people that have been saying for 6+ months now that they're going to pause. So if I had to choose, I'd say down, but not in a convincing, 80-20 way. I just got an instant message from Kevin on my phone, and we've got a thunderstorm. Kevin lives about 3 miles away from me. We've got a thunderstorm going on right now, and apparently Kevin just lost his power. I may be a little bit fortunate that I have not lost my power, but we didn't get a chance to say goodbye to Kevin, but we were kind of in our final thoughts anyways. I'm going to wrap it up right there, everybody. Maybe end this before it ends for me on a power failure. Have a great week. Stay neutral in your trading. Don't go too bullish. Don't go too bearish. It is so hard to predict right now what this market is going to do. Have a great week. We'll be back live next Monday. Thanks, everyone. Bye-bye.